We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button. Let's see if we can get today's video over 40 likes. And here we are with the SPY, the S&P 500 index, having a full downward trend today and actually going into extreme weakness based off 42 vision, right? Going from bright green, which is the rip area, to the dip area of extreme weakness. And today, within this volatility, our SPY bot since 8:35 a.m. sent out a bear indicator, and from that moment forward, outflow started to begin to dominate, crossed to the downside, and put options went up after the bell 300% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the Discord, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, our 42 vision indicators, and we have many more bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And this is my opinion and perspective alone, not financial advice, but volatility is here to stay. And within the volatility, to be able to maximize, having a clarity and edge makes all the difference. And it doesn't have to be 42 vision. But if you find value in what I share here and you want to become part of a growing community of investors using these resources to maximize in either direction, check out the link down below in the description to the 42 vision indicator. So here we are with the SPY at a point where it's coming to retest where this run started, right? It started back here at around 357, the new 52-week lows, and we're coming right back to the previous 52-week low, which turned into a pivotal support level. And here we are near 362, and we hit lows here of 361, getting really close to almost testing a new low. We're going to break it all down in today's video, what's going on here with the inflow versus outflow and the bull and bear indicators. But before we do, I want to share with you guys the home and opportunity I mentioned this morning over at the Discord. And as you see popping up here on the screen, these are some of the home runs I managed to find this week alone. And while it's not guaranteed to be this way every single day, we strive for opportunities like these every single day. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the three stocks I mentioned this morning. All three of them gave jumps of 5 to 10%, 10 to 20% plus. But the spectacular home run of the day was LUCY. We caught this one in the pre-market here, sitting sideways under a bear indicator, slight dip at the bell, and then it went into full strength here on 42 vision, got that bull indicator, inflows crossed the midpoint with full strength here, and it hit a highest point of 30% plus, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. So in yesterday's video, I went ahead and talked about the S&P 500 index, how it can actually have some volatility, and it was sitting in a tight channel here between the 370s and the 379, 380 mark. And today was a pivotal day, as you see popping up here on the screen, with these data points if they came out, right? Unemployment expectation was 3.7, and non-farm payroll was expected to be 250K. In yesterday's video, I explained why the stock market was rallying, right? It turned out to be the whole entire speculation and hype behind the possible pivot. Well, this data point, the things that I stated yesterday have happened, right? I stated if non-farm payroll came in higher than expected, while it looks good on paper, it's not good for the Fed's decisions and this so-called hype and speculation of a pivot. Same thing with unemployment. If it came out lower than anything expected, is the same thing for the Fed as well, meaning that they still have more work to do. So the whole entire stock market was expecting these numbers to turn out to be worse than expected. So 3.7 or higher of unemployment would then justify this run here of a possible pivot, and non-farm payroll turning out to be less than the one expected or somewhere close to it, right? And here we are with it coming right back down, the whole entire S&P 500, everything it ran. And the question mark is, where are we going from here? And that's what we're going to break down in today's video, what the inflow versus outflows are showing and our bull and bear indicators. which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. Slots are now open for those interested. The link is down below in the description. So here we are with the SPY. It was under a bear indicator on the 30-minute since yesterday up here at 374, and the outflows had crossed, right? We talked about this in yesterday's video, and then also here on the 15-minute, it had crossed as well, and it was actually trying to come back up in the aftermarket hours, and I stated I was going to watch if it could try to cross back over or reject, and that's what happened, right? It was under a bear indicator since earlier in the morning here at around 375, almost 376. Sideways action, rejected, outflows cross. They had been dominating, and if it stayed below it, outflows were going to put pressure on this chart, and it was in the process of a full transition from the rip to the dip. I stated we had hit red bars, and the one piece missing is a dip area, right? You could see how 42 vision shows us the white with red borders, and then also the green bars. This is what we call the dip. This is what we call the rip. And from the rip to the dip, and the bull and bear indicators are there as extra layers of confirmation, and the inflows versus outflows are there to also confirm the strengths and weakness of these moves. And today was a clear sign that the bear indicator on the 15-minute and the outflows dominating on the 15-minute had weight on the charts, plus the data points that came out and the 30-minute under that bear indicator here towards the end of the day, up at 375 to 374, and it rejected as it was trying to curl back up right below that bear indicator, and the outflows quickly switched from green to red and were below the midpoint there as you see it. Now in this dip we have inflows picking up, and I'm going to share with you guys what it is I'm watching going into Monday, because this was a massive drop and we're near the 52-week low again. Will we hit a new 52-week low? I look forward to seeing your comments down below. Where do you see the SPY going? Will it have a dead cat bounce again, or will we go even lower? Because if it does have a dead cat bounce, this could turn out to be, in the bigger picture, from all the way back here and right now where we're at, and right now where we're at as well, then we are also in a third or triple bottom effect if we bounce from here with strength. And it's going to take a lot of strength. So super important to keep this in mind. Is that possible? I look forward to seeing your comments on that as well. So here we are, the SPY on the 30-minute, on the 15-minute, under a bear indicator. And when you go to the 1 hour, this also was what I was watching, and those outflows crossed towards the end of the day. It was sitting sideways, and I stated I will watch if it tries to come back up or if it continues to go down even further. Why? Because even though I didn't have a bear indicator, I stated when these outflows cross, they actually have a significant impact on the charts, right? The last time it happened here was on Thursday, 29th of September, and it went from around 369 to 359, almost a $10 move. And if you look at it today, 373 to 362, nearly a $9 to $11 move. And that's what happens when these outflows actually start to dominate. Now to the upside, same thing, full transition from the dip area, bull indicator, inflows cross, and it went from 361 to 378. That was a pretty strong move in 2 days, and the outflows began on Tuesday. And then the one thing that held up the markets, making it look like it was bouncing back up, was the fact that those outflows did not cross. The inflows tried coming back up, and then they started with the outflows again since yesterday, and today it got that confirmation of those outflows and bear indicator in the aftermarket hours yesterday going into today. And here we are in another dip area, super critical levels. And some are even speculating the possibility of capitulation from these levels. We'll have to see what's about to happen. But right now we're in a dip area. We're under a bear indicator on the 1 hour and the outflows have crossed. You could see a slight amount of inflows picking up here. We'll have to see this actually go back up towards the midpoint or cross it before it can start reflecting in the charts. And also a bull indicator that cancels out that bear indicator. I'll be watching for that going into next week. On the 30-minute, same thing, these inflows are picking up. We want to see it get back towards the midpoint or cross through it. And we want to hold above not just 361, but the lows here of the 52-week low of 357. If that gets broken through, the next support is 355 to 350. And then we could start talking about other levels below that as we get closer. But if we bounce up anywhere between here at 362 to 357, to the upside, the first resistance to break through is 365. And then we can start talking about 367 and then up towards the highs here of 374. These are critical levels to the upside as well. And we want to see these inflows picking up. And if things start picking up and breaking through resistance, we want these bear indicators to get canceled and bull indicators to pop up on the 30-minute, on the 1 hour, and also on the 15-minute, guys. We want this momentum to continue and roll over into multiple time frames. So these are the key things I'm watching. These are the key levels I'll be watching, but a lot of volatility. And within this volatility, as I always state, I believe it's here to stay. Having your clarity and edge makes all the difference to maximize on the opportunities. There's opportunities nearly every single day. This is my opinion and perspective alone, not financial advice. And as always, guys, thank you guys so much for watching, and let's make some money.